Hello traders, and welcome back to Explain the Charts. Today is October 12th, 2025, and we're taking a close look at AUDUSD, which has just experienced its largest weekly drop since March. In this video, we'll analyze the fundamental news driving this massive move and then dive deep into the charts to identify key levels and potential future price action. Let's start with the news, as it's the primary catalyst for this sell-off. The biggest headline is the renewed and mounting trade and tariff tensions with China, which has sparked a substantial risk-off sentiment in the markets. As a commodity-linked currency, the Australian dollar is particularly sensitive to this news, leading to the sharp decline. In Australia, the economic picture is also weighing on the currency. The Reserve Bank of Australia has kept rates on hold, but recent data shows Australian consumer sentiment sliding to a 6-month low due to inflation concerns. Furthermore, the country's trade balance shrank more than expected in August due to a sharp fall in exports. Meanwhile, in the United States, the dollar's recent strength has stalled, largely due to a government shutdown which is delaying key economic reports like labor market data. This uncertainty around U.S. data could lead to volatility once the numbers are eventually released. The market is currently pricing in rate cuts from the Fed, but this could be repriced if strong data emerges post-shutdown. Despite the current bearish sentiment, it is worth noting that UBS recently upgraded its long-term AUDUSD forecast for September 2026 to 0.72, which provides a contrasting long-term bullish perspective. Now, let's turn to the charts to see how this news has impacted the price. Looking at the daily chart, we can see a clear uptrend that began late last year and culminated in a significant peak in late September. However, the price has reversed dramatically in October, wiping out months of gains in just a matter of days. The candle from October 4th was particularly brutal, closing down nearly 3%. The sell-off then continued with another sharp drop this past Friday, October 10th, which saw the pair fall another 1.36%. This price action confirms that the short to medium-term trend has decidedly shifted from bullish to bearish. Let's zoom in on this recent price action since the beginning of September to get a clearer view of the reversal. The pair topped out around the 0.6940 level on September 27th, which now stands as a major long-term resistance. What followed was a swift and aggressive rejection of that level. The breakdown was confirmed with that massive bearish candle on October 4th, which sliced through several potential support zones without hesitation. This is a classic example of how fundamental news, in this case the China trade tensions, can trigger a powerful technical move. The market structure has clearly broken down, with lower lows and lower highs now being established. After a brief period of consolidation, the sellers took control again at the end of last week, pushing the price towards a critical support area. Switching over to the 1-hour chart, we can see the recent price action in more detail. One analyst report from earlier in the week noted that AUDUSD was stuck in a range, roughly between support at 0.6575 and resistance at 0.6627. As we can clearly see, that range has now been decisively broken to the downside. The drop on October 10th was relentless, with price cascading lower throughout the day. Right now, the price is consolidating in a very tight range right on top of a major support level identified by analysts. This level is around 0.6477 to 0.6483. The low on Friday was 0.6466, briefly piercing this zone before bouncing slightly. This area represents a major battleground between buyers and sellers. The market is pausing here, deciding whether to continue the plunge or stage a recovery bounce. If we zoom in even further to the 15-minute chart for the final hours of trading on Friday, we can see this battle at the lows. Price is coiled in an extremely tight consolidation pattern after the big fall. This indicates extreme indecision in the very short term. A sustained break below the recent low of 0.6466 would likely trigger the next wave of selling. Conversely, if buyers can push the price back above the 0.6490 area, it could signal a short-term squeeze and a potential bounce to test higher resistance levels. This micro-level action is what day traders will be watching closely at the market open. So, let's go back to the daily chart and recap what this all means. The narrative is currently overwhelmingly bearish, driven by fundamental news and confirmed by the technical breakdown. Let's summarize the critical price levels you need to watch. The most immediate and crucial support zone is right where we are, between 0.6477 and 0.6483. If this level breaks, the next downside targets are the lower parallel of a descending pitchfork around 0.6458, followed by an extension level at 0.6443. Below that, the major support target is the August swing low, which sits in the area of 0.6404 to 0.6414. On the upside, if we get a bounce, initial resistance is expected at the 0.6520 to 0.6526 zone. A move above that would target further resistance around 0.6550. For the medium-term bearish trend to be invalidated, bulls would need to reclaim the August swing high at 0.6569. Now for our unbiased predictions. We believe a bearish continuation is the more likely scenario, with about a 70% probability. The fundamental and technical pictures are aligned, suggesting the path of least resistance is lower. A daily close below 0.6470 would reinforce this view and likely open the door to the 0.6404 area. The bullish bounce scenario has a lower probability, around 30%. For this to happen, support at 0.6477 must hold firm, and we would need a catalyst, such as positive news on China trade or very weak U.S. data, to fuel a recovery. Looking ahead, the main things to watch for are Aussie employment data scheduled for this week, any developments on the U.S. government shutdown, and any commentary from Fed Chair Powell. Also, keep a close eye on the weekly close to see if this breakdown below support is confirmed on a longer time frame. This has been a detailed look at AUDUSD. Please remember, this is not financial advice and is for educational purposes only. Always do your own research and analysis before making any investment decisions.